What is up, everybody? I'm back with another play recap. Um, so today's the 14th. We had an absolute banger day playing QQQ and Spy. So I'm just gonna make a quick play recap, go over everything, all the trades I took, why I took them, and I'm gonna give you guys a little bit of sauce in between. So let's just get right into it. So 931, pretty much right off the open, I alerted SPY 420 put at 1.8, and that was right here. So this is ES's chart, and right here off the open is where I alerted those puts. Why did I alert those puts? We actually opened up and we pushed up a tiny bit right before the open, and I saw my opportunity to short right there because not only was VWAP right here, but both my moving averages were right here as well. If you guys don't know, the only four indicators that I use while I trade are up here. It is the volume, the 5 EMA, 9 EMA, and VWAP, of course. So that being said, it was testing three pretty large indicators that I use, and I didn't expect it to hold. So I alerted those puts, and we just dumped right away off the open. Quick recovery. Of course, market makers do this all the time. It's very predictable. Before a big dump, they're going to pump these on low volume. And what I mean by that is this is your open volume, and then look at the volume, how we decrease after that, right? So it's just decreasing volume all throughout. And that was another big sign that we were probably going to continue short pretty much the whole day. So that was the first play that I took. It jumped up pretty much right away, and I'm going to tell you guys when I scale out, in this position in particular, I think I was in 65 to 70 contracts. As soon as it hits 20 to 30%, that's when I scale out pretty much, I would say, the bulk of my position, right? So if I'm in 75 contracts, I will probably take out like 30. That way, it's more of a stress-free trade for me. I have my bulk sizes out of there, and I have my stop loss at break even, and I'm going to show you guys in a little bit what my thinkorswim setup looks like. So that was the first trade that ran to, I believe, it ran to 2.8, and then we had some issues with the brokerages. Then at 12.22, which is going to be right here, right in between this area, is when I alerted QQQ 320 puts. And reasoning behind that, very, very simple. We had this real big push down, and then low volume pump, right? And then the rejection. And the other thing I was looking at, this was your low of day level, right? So this being low of day, this becomes a pretty large support area for the day now. So what I'm looking for initially is, okay, we see a big drop. Now we're at low of day. So if there's really buyers sitting here and they wanted to bring it up, there would be a really nice push up, at least 2-3 candles, right? At the minimum. But we only see a 1 candle push, and I want you guys to notice the volume up here on the top left. This is the downtrend volume. Notice how we're seeing high 30s, well, high to mid 30s, high 27s. And then right here we get a 25K, right? And you can just tell by the bars down here how much lower this is as opposed to your downtrend, right? So on this little push, again, we also tested our EMAs here. And I tell you guys this all the time: in a downtrend, add on the touches of the EMAs, and then an uptrend, add on the touches on the EMAs, right? So you get a push up, added puts, and those worked out super, super nicely, right? And then the last trade that I took was at 1:15. 56, which is going to be right around this area. Right around this area was that trade. So I entered again, same exact reason, right? You're just touching the EMAs in a downtrend. That was my only reasoning behind this play. And we touched those EMAs, so I add, and then we made a new low of day there. And I exited those pretty early, but those ran, I believe it was 40%. All right, so that was that. All right, those were the trades that I took. And you know, again, when I'm in these trades, so let's say I'm in this trade right here, the QQQ short that I alerted. The only time I'm looking to cut these is if I see any reason behind cutting. So that would be if we broke over our both of our EMAs, or you know, if we start seeing a higher volume pump, right? So things like that, those are going to be the main reasons why I would cut it. I'm at a point where I can kind of look at price action and see if, you know, like this candle is strong enough to see continuation. That comes with a little bit of time, but for the most part, you really just need to look at the volume, the entire downtrend. You know, you see the volume here, and then we see a little lower volume and even lower volume. So, right, you can easily expect this dump. And then look at the dump volume, right? It's really not there, right? So, I mean, after a like 100-point drop, you would assume that the sellers are a little tired, or they're probably taking profits. So this is where the buyers step in and you start to see a little bit of volume start picking up, right? So that's mainly what I use to determine. Again, I mostly base my entries off of a 5-minute, and then I always double check on the 15. And when I'm in the trade specifically, I look at the 15, because on a 5-minute, this downtrend looks a lot different, right? This downtrend has a bunch of green candles that might scare you away, but in reality, we're just in a big downtrend the entire day. And even bigger time frame, if you wanted to look at the 30, we're just red the whole day, right? So you know, what I'm looking for on a 15-minute, again, a break over my EMAs, or we make newer highs on good volume. So like this one right here, typically this would be your sign in a trend reversal, right? Is you know, in a downtrend, we're making lower lows and lower highs, and then you see a higher high here. Typically, that's a sign of, you know, bulls might be taking charge again, but you also have to look at the volume, and again, it is not there. So immediately I'm looking to short again. And you know, you see how it ends up working out. But that is really the only thing you guys need to look at. Again, every single time that I'm in a trade, I take the bulk of my trade off at about 25 to 30%, maybe even 20% sometimes. And once I do that, it becomes a little less stressful trade, right? Because the majority of your size is gone now. It's all back into your account. You don't have to worry about a thing. And then when it goes green, I always set a stop loss at break even or just above break even. So if your average is $1, then you set your stop loss at $1.01, right? So you literally can never have a red trade. You know, worst comes to worst, it goes down, hits your stop loss, and then you can re-enter if you see fit. But this way, you're not caught bag holding anything, you know, because your stop loss is at break even. So it'll automatically exit you as soon as you go back to break even. All right. And then to go over that a little bit, I'm just going to show you guys, I'm going to switch over to my Thinkorswim, and I'm going to show you guys my setup there. So here's my Thinkorswim setup. These are some of the contracts that I played today, and you can see it's really easy for me to navigate through all of this. So let's say I enter a trade at 0.83 and it goes up to $1. then immediately I put a stop loss right there at 0.84, and that way I can literally never go red, right? And then, if I enter this trade at 0.83, maybe at $1, I'll take off the bulk of my size, and then, as it continues going up, right? But at the same time, I'm also moving up my stop, moving it up, so that way I'm securing more and more and more profits, right? It's kind of like a trailing stop. So, except you're just manually doing it. But other than that, that was today's play recap. I focus more on quality over quantity. So you'll see 2 to 3 plays, all bangers, and we're done. Don't need to overdo this. But other than that, that's it. We'll see you guys in the next trade recap.